Well, I'm gonna get started, and I'm sure other people will come in. Asharina will let them in and go through the chat for any questions. I hope everyone can hear me. Good morning to you. Happy Saturday here in Dallas. I'm happy to be here to talk to you today about SEP IRAs and solo 401ks. And so our call today is we're with you every step of the way, AMG Council. I'm here with Hood Williams. Hood is a regional manager at Saturna Capital. He joined them in 2021. Hood has about 20 years of financial services experiences in a variety of fields in the financial markets. Um, some of are implementing Islamic compliance, home financing, and other financial instruments. His education and background includes undergraduate degree in economics from ODU. Hood also has an MBA in finance from Georgia Institute of Technology, and he currently is getting his certificate in Islamic finance and education. Mr. Williams is married with 6 children, and he splits his time between his family, work, and community, which he's here now for the community. And he is currently on the board for the Muslim Aid USA Relief Organization. So, Hood, thank you so much for joining me today and
I
jumping
just got
in.
promoted to the chairman of the board for MAU.
Oh, okay.
So that's just a
All
little.
right. Congratulations to our new chairman of the board. Thank you for spending some time with us this morning on the board. So thank you so much. So, all right. So I'm going to switch over. Hood, can you see the slides?
Not yet.
Okay. Can you, let me make sure.
I still see these two sharply dressed.
Yeah. Oh, okay. That's it. That's the front. That's the banner. Okay. All
Yeah.
right. Okay. Awesome. All right. So,
Here we
of
go.
course, we have our disclaimer. This is for educational purposes only, not legal advice. I am a lawyer, but I am not your lawyer at this time, and I will be happy to do so. But we're here really to give some information, some knowledge to entrepreneurs, even W-2 workers, whomever in the community, to get them familiarized with some topics that they always don't accustomed to hearing just in general conversation. So every step of the way here to really understand these self-employed pension plans, IRAs, and solo 401ks, and a little bit how it can help you as you're moving toward your tax filings, right? Tax time is coming up. The SEP IRAs and solo 401ks are some strategies that you can use for tax planning purposes and have been used retroactively. Even if you made money in 2024 and you're like, oh man, I made too much money. I need to do something with that. The SEP IRAs could be somewhat of an option for you. And I've used these in the past with different clients. For most individuals, they'll come and say, what's the best plan for me? Is it the SEP? Is it the solo 401k? I'm very confused. What do I do, right? And so a little bit of it is not even always which plan is best for you, the SEP or the solo. Most of the time, I'm instructing my clients on what's the tax advantage for you, right? If you're able to put money into a SEP IRA or to a solo 401k, and you can limit and lower your tax bill, to me, that's where the real savings is. That's where the contribution is, because now you're taking money that you would have paid to the IRS, and now you're paying yourself that money. And that money's going into your retirement, not into the IRS coffers where, it's sitting there being used for, who knows what in these days. So the SEP is a simplified employment pension individual retirement account. It's designed for self-employed individuals and small business owners. And the good thing is contributions are tax deductible for the business. So again, not only are you have this business income that you've generated, Now you can deduct your retirement from that. And that's just a really beautiful thing to be able to do for a small business owner, that you're still able to save for retirement for yourself and deduct it from your business expenses. Key features: easy to set up and maintain. Contributions are made only by the employer, which is your LLC. So just remember, small biz LLC, or it's you're the employer, so you get to contribute to it. Sometimes it gets a little confusing with the solo 401k on what employees can do and what the business can do. Please remember, if you're an S corporate, if you're classified as an S corporation, we can talk about that. It gets a little bit more complicated on that, because as a S corp classification, you are getting paid a W-2 as an employee, and you're the employer in the same. So it is a little bit more complicated process in that. But if you're just an LLC, you're the employer, you can maximize your deductions. So it's the lesser of 67,000 or 25% of compensation. And compensation is really after the fact, that adjusted gross income. And we'll get into the calculations on that in a little bit. So some of the advantages of the SEP, right? Contributions are discretionary, so you don't have to contribute to the SEP IRA if you don't have the funds that year. Some people have a boom in their year gross, revenue. So maybe they have, 300,000 in gross revenue that year. They're like, okay, I need to take the lesser, that either that 67,000 or that 25%, and try to park this money into my SEP IRA. The good thing is, and Hood will get into this too, probably, there's no annual IRS reporting for the self-employment pension, the SEP. And so you don't have to kind of worry about compliance as much as you would need to. We'll see later with the solo 401k. Contributions to the SEP IRA, they're completely independent from any retirement plan at a job. And so during my research, this was really interesting to me, because people work, they have a W-2, they start their side hustle or their business, and then that business starts to take off. And sometimes before they had a chance to transition from, leaving, their job at, Acme job company to go to their small biz LLC, they're in between. And so even if you're in between, you're still allowed to do the SEP IRA, be able to take your LLC earnings and park them in retirement from yourself. And we'll go through a calculation that kind of shows how you do that for both the SEP and the solo 401k. And again, if you have questions, please put them in the chat. Sharina will look at them, because we'll try to get to some of the questions at the end, and let Hood have some time at the end of the course to go over a few things. So the disadvantages of the SEP are, if you have employees, then you must contribute equally a percentage of their salary to the SEP. And sometimes that's where most of my small business clients come to me and say, hey, I do want to set up a SEP, but I don't have enough funds to do the both of us. I can't put, 25% in for me, and maybe I brought on these 2 employees. Some small business owners will say, hey, if they're an independent contractor, can I do this? And then I tell them to call me, because we need to work through that situation. Because just because you, the owner or the employer, deem them to be an independent contractor, the IRS can see that differently based on how much control and dominion you have over that person. And you may get caught in a snafu where you need to set aside for their SEP. So sometimes the SEP may not be the best option, because a person has employees, and that's up and down. The other thing is, you can't do any catch-up contributions, aren't available for the SEP. So if you're over 50 or 55, catch-up contribution is you can add more money to your retirement account than what you normally could, and you can't do that in this instance. All right, so a little bit we talked about, can you have a SEP with the W-2 job? And yes, you can. Talked about that a little earlier, because now you have this W-2 job. It's a employer provided retirement plan with the simple IRA or 401k. And so these are a few rules to keep in mind, but you can do both, which I think is really good for someone. So in our scenario, we're going to take a salary of 100,000. Unfortunately, with inflation, not as much as it used to be these days. So hopefully you have some Bitcoin or Trump meme coin saved up on the side for you that boomed over the weekend. So your salary is, I'm at Acme, right? So I have a simple IRA plan or 401k plan. And then my net earnings at my small biz LLC, I made 100,000. And then we'll go from there. So the first step is your SEP IRA contribution. So for your LLC business, small biz, you are the employer. And so your employer contribution is what will factor in. And that's where that 25 percent net earnings or 60, 66, 67 percent from self-employment, whichever is the lesser, accounts for that. And then you pay your self-employment tax. So if anyone's on the call who doesn't know about self-employment tax, maybe you're a new small business owner, self-employment tax is basically what we know as FICA, right? If you have a W-2 job, that's that Social Security and Medicare I put here. And so self-employment tax covers that for you, that 15.3. But the IRS gives you a break because they know as an LLC, you're both the employer because it's your business and the employee because you're working in the business. So you only pay half of that self-employment tax, that's 7.65, and it's deductible. So you calculate your adjusted net income. So your business made 100,000. You deduct that self-employment, and now your income for their purposes is 92,000. Now you multiply that by the 25%, and that's how you get to 23,000 is the max that you can put in your SEP IRA, which is a good amount of money because maybe maybe you made a lot of revenue, maybe you made a lot of money in that situation, and now you have a way to park at least 23,000 in retirement for yourself for that year, and you can really start saving on that. And Hood will go through the investment portion of where do you put that money, how do you set it up, because we will talk about that too later on. I just want to kind of give you a sense of how much you can park and some good uses for it. Even if you work or you're transitioning, this is the opportunity to know about these ahead of time and jump ahead of it. So the step 2 in that calculation, right, because we're getting into the tax savings of it all, is, okay, so now I'm at Acme. So Acme, your employee deferral limit is 16,000, right? It can be up to 22, but let's say we're contributing to this. So you have the 16,000 for 2024 from your employer match. Here's your set money that I showed. So here's your employee deferral that you have from your simple job IRA of 16,000. Your employer matches, in this example, 3%. You get that 3,000, and then I totally messed this up, so that should be 19,000, and go from there. And then you would have the 23,000 plus the 18,500. So this is your savings that you're saving in from income if you do a SEP and you have a side business. So you're able to save that 23. You're already able to save the 18,500 from your individual retirement account. So you're potentially saving about 41,000 kind of taxable income by doing these retirement benefits and setting up for yourself for retirement. So I would definitely look, at that as a savings tip and go from there. So we'll jump over to, so what's a solo 401k? The kind of the sister of that. And they're very similar, but this one really kind of combines a traditional 401k plan with profit sharing, but also too, contributions are deductible for the business. The solo, as it states, is more for a self-employed individual, as opposed to self-employed individual is supposed to no employees except a spouse. So sorry about that. I saw someone coming to the room. Okay. Okay. All right. So, okay. So here you have the dual contribution, where you act as both the employee employer. Your employee contribution limit, 22.5 for 2023, is some of the last numbers I had. And then your employer contribution limit is up to the 25% or net from self-employment. So you could possibly add, up to that 66,000 that you were able to save, very similar to what you had in the SEP IRA. But again, you can act as both the employer and employee, and you're able to save a little bit more money that way.
Antonio, we have a question in the chat.
Oh, okay, yeah.
Camille wants to know, do you have to be an incorporated LLC and not just a sole proprietor?
From my knowledge, you need to be incorporated to act on this. Hood, on the administrative side, have you seen something different?
No, that's what I've seen. Usually it's an incorporated company.
Yeah. So for the most part, Camille, when I set up an entity, these are some of the first things that I share with them, and another reason for them to get incorporated and get signed up so they can be able to take advantage of all these. Now, your entity structure can be a little different, in the most part, because again, an entity is a limited liability company, which is statutorily through the state, the same as a corporation. And then S Corp is not an entity, right? I think a lot of our small business owners get confused by that. They think, oh, I'm an S Corp. S Corp is a tax classification. It does help you with your taxes, but it's not an entity. So Camille, anyone who is thinking about setting this up, I would encourage them to set up the proper entity. So not only do they get the limited liability protection, they get to utilize these tax saving tips. So the advantages of the solo 401k: higher contribution for potential high earners. There are catch-up contribution provisions, and you can take a loan from your solo 401k based on the numbers. I think it was 40%. I didn't include all the rules for this, but I can get you that information if you need it on the rules for the loan provisions. The disadvantages of the solo 401k are the administrative filings. So I think it's form 5554 for solo 401ks that need to be submitted. Then you also have your compliance issues that you may have with it. So for some, and again, here, if you have employees, then the solo 401k, you won't be able to use. The same question applies. Can I have a solo 401k plan if I have a W-2 job? And yes, you can. It's a little different in how you would do the calculation, but you can still have both, and we'll go through those really quickly. Again, salary 100,000. I'm at my Acme job company. My small biz LLC, I made 100,000. So you're kind of looking at that 200,000. So you have your contributions from your solo 401k, and then your employer, Acme, is paying this portion of your contributions. So here, it allows contributions as both employee and employer. And the limit applies to all retirement plans. So in this case, you have a limit up to 23,000 that you can give from all plans, including your including your simple IRA from your job, from Acme. And then so if you're already contributing, let's say you're contributing 16,000 to Acme, right? Then you'll have a remaining 7,000 from that 23 that you can inject into your small biz 401k. Let's say if Acme is 0, then you can put the whole 23,000 into your small biz. So really, it's kind of that cap, that limit. On the employee side is what you have with this solo 401k, and that's something that you will want to keep mind of. When you set this up, again, you'll have professionals around there to help support you in making this happen, setting it up, even the entity setup and everything, and then Hood and his team come in and set up the plan for you and go from there, and we'll get to that shortly. So we talked a little bit about the limit earlier in the SEP. This one is pretty similar, where that 23,000 from the 100,000 is what you'll be able to contribute. You have your self-employment tax. So from the employer standpoint, which as if you're the employer, from your small biz LLC, you're able to contribute that 23,000 into your business and go from there. So your employee contribution, which is the 7,000 from you, the employee, Acme has the other 16, and then you have this 23. So kind of your portion of it all, you as the individual, would be about 30,000 that you're able to put away. And then you also have the additional monies that you have from your W-2 job that will go here. That's 16 plus 3, so that's 19. If you have a job at Acme, you're putting that money to the side. So now you have a combination of both. And then your savings is about 48,000 that you're able to put away from potential earnings into your retirement account if you do the solo 401k plan. So again, which plan do you use is somewhat up to you and your set of facts and situation. But I do think that having a solo 401k or a SEP could offer you, quite a bit of income tax savings when it comes to tax time. And we'll get into that. In this slide I just included is basically a rundown of what we discussed in the scenario. And when I share the slides, you'll have a kind of an easier one-page calculation of what it looks like.
We do have another question.
Okay.
The request is to explain the difference between a solo 401k and a SEP IRA.
So the difference is, like the definition difference is, one is the solo 401k is more of a retirement plan for just a single person, as you can see here. The solo is, there are no employees, but you can have a spouse. The SEP is a self-employed one. And this one is for a small business who has employees. Here's the contributions, employer only. The solo, the employer and the employee can contribute. So really, like outside of of course, the names, these are the differences that you would have. So this one is 66, but if you're over 50, you can put in 73,000 because you have that catch-up contribution that you can add on as you get older. Here, and you can see it right here, 7,500 more if you're over 50. Loans aren't permitted for the SEP IRA or for the solo 1K. Yeah, they are. There are limits, and I think it's 40% of what you can take out. And then the administrative costs are a lot different. So the differences are here in the slides. And if you have specific questions, we can talk afterward and go from there. Sorry about that.
Yeah, definitely. Just one of the things to kind of keep in mind with the difference is that the solo 401k is more administratively burdened, but it also allows you to put in different types of income. So it's a bit more sophisticated, the solo 401k than the SEP IRA. So the solo 401k is more sophisticated, but it also comes with a higher admin cost, more kind of administrative kind of things that you have to look at, because there's different types of contributions in the solo 401k. So you have the employee, the employer, you have profit sharing, so on and so forth. The SEP is almost very simple, all 100% employer contribution, so on and so forth.
Okay. All right. Well, let's jump to that to get into some of these key aspects of you. Again, here's more of what we talked about, the considerations, the simple setup, the requirements of the form, the 5,500 form. If you have more assets, that's some of the administrative costs. So, the question then gets to, do I need a special account for the SEP IRA and 401k? And then, yes, you do. And that's why I have Hood on the call with Saturna to kind of go into this, financial institution that'll set up the account for you, manage it, and help you with these. So actually, Hood, I'm going to skip over some of my slides to kind of talk about, this a little bit, some of the administrative filings that we have, and I'll let you jump in on the administrative filings and the different contributions that you can do for that. How does that sound? All right. So I'm
Great.
gonna start sharing my screen, everyone. And give me 1 second. And Hood, you can share your screen.
I think I just sent the request.
Okay, yep.
And forgive me, I am actually on the road in Nashville. So trying to do this remotely. Here we go. There we go. Can you see that screen?
Yep.
So great. So just like Antonio started, my name is Hood Williams. He did a great job kind of introducing me. Just the one thing I like to add is that I really want people to understand the power of investing, the understand of making sure that, hey, look, we want to make sure that everyone pays their fair share of taxes, but then not a penny more, right? So we want to make sure that folks are taking care of all of the tax advantage accounts they have. You know, in our business and kind of, wealth advisory, I say, look, I want to create wealth, but I want to create the wealth as efficiently as possible. So things like a solo 401k and a SEP IRA help to create that to happen. So similar to Antonio, we have a disclosure. The disclosure means that, past performance are not going to be guaranteed for future performance. And I'm going to touch on the 401k and the solo 401k and the SEP, but I want to take a step back. I want to take a step back and talk about, what should we be doing as investors, right? And so I'm not going to drain the slide. I just want to focus on two big ones. The first one is diversification. We all know we don't put all our eggs in one basket, right? And so we don't invest all our savings or all our investments in one company. And so that's where a mutual fund comes in, because a mutual fund allows you to, instead of buying one company, you're buying a basket of companies when you buy this one mutual fund. So this is what we do at Amana Mutual Funds. And number two is it's not about trying to time the market. Hey, is it going to be a dip? People have been calling me. It's like, oh, is the market going to go up after President Trump? Or is it going to go down after President Trump? I want to know to get in, to get out, to move this. And I said, if I knew that, I wouldn't be waking up on Saturday morning. I would be in Barbados being like, Tone, what's up? Now, so I don't know how the market is going to perform, but I know that over the long term, when you invest, it's going to kind of work out in your favor. And so that's why we say it's not about timing the market, it's about time in the market. And so this is just one example. This one example is thinking about someone who starts investing, right, when they're 25 years old, right? And they do $250 per paycheck, just $250 per paycheck, $500 a month, $6,000 a year. If you start that at 25, when you're in retirement at 65, you have $1.3 million. And this is at a 7% rate of return. So just that one kind of investment is going to put you at 1.3. And one of the ways to kind of look at this 1.3 is that 1.3 gives you roughly $85,000 to $90,000 of residual income for the rest of your life. And you still have $1 million to give away, to leave to your family, so on and so forth. So this is what we're trying to create, like in investing and investing for retirement, so on and so forth. And when we see that $1.3 million, 240 came out of your check. That means times you didn't go out to eat, times when you didn't buy new shoes, times when you had to make other decisions because I'm going to prioritize investing over doing something for the here and now. But you have $1 million worth of gain. So you have almost 4 times the amount of gain that you had that you actually invested. So it's a really important kind of way to look at what we're doing here. So definitely, this SEP IRA is great. One of the ways that I look at SEP is I see it when there's a company who there's partners. So Antonio and I, when we start our modeling business and we're both partners, then, we'll both put in, 12% of our salary for both of us because we're both equal partners. Or if it's a husband and wife, when the husband and wives, I'm gonna put in 20% for me, I'm gonna put in 20% for my wife. When there's like an owner plus employees, that's when you start figuring out that the SEP doesn't work, because maybe the owner wants to put in 25% for themselves, but they might not want to put in up to 25% for each of their employees. So that's when the SEP kind of doesn't kind of align. And you can do a SEP for 2024 up until I think up until March, up until the tax filing deadlines for business. Is that right, Antonio?
Yeah, you can still file. So if you're a small business owner and you feel like you made a lot of money in 2024, you still have up to the filing deadline to set up a SEP and contribute to it like you would another retirement account and get that set up to get some of those tax savings.
Yeah. And then the amount that you can put in the SEP is always kind of changing. In 2024, it was 69,000. In 2025 is going to be 70,000. But it's always 25% of the income that you pay yourself, or 70,000 or 69, whatever that limit is. So if you're only paying yourself 10,000 and you're keeping the rest of the money in the business, then you only could put, 25% of that into the SEP IRA so you have to think about that when you're trying to think about your contributions to the SEP. And secondly, you have employer plans. Of course, you have the solo 401k, which is going to be, if it's just you, when you open that solo 401k, you're able to contribute as an employee and as an employer. 23,000 as an employee. If you're over 50, you can do 30. The employer can do 25% as well. So you could really start supersizing your growth and supersizing your investments. The 401k plays a plan expenses. And then you can also do something like have a Roth contributions in that solo 401k as well. So usually people are not too keen on that, because one of the reasons you're doing the solo 401k is to get these tax benefits. But you can also say, I want to put in after-tax money, and then those funds will be there for you to kind of take out in retirement without paying taxes on it. Outside of the solo 401k, if you don't qualify for the SEP or the solo, then you have to look at, you have to look at retirement plans that include employees, like a simple IRA, as well as a regular 401k. And so, Saturna Capital can help with that as well. Okay, so one of the things that we want to talk about is that after I go and said, okay, I did all the paperwork, I have $48,000 to invest. Where do I go from here? And so what we do at Saturna Capital and Mana Mutual Funds is that we do sustainable investing, right? So we have investment guidelines that allow us to avoid companies that are involved in interest in alcohol and gambling and exploitative media, right? We're also looking for companies that have very low debt, right? Because very low debt protects us from downside risk. When the economy can be a bit volatile, the companies that don't have a lot of debt requirements can kind of weather the storm better. And so those are some of the kind of sustainable guidelines that we use in investing. And so when we're talking about investing, we have 4 mutual funds. The first mutual fund was started in 2015. It's our latest fund. It's called the Mana Participation Fund. It focuses on capital preservation and current income. So it gives you a distribution of the income on a monthly basis. If we go up one level, we have the Mana Income Fund. This is the kind of fund that started it all. It was started in 1986, and it focuses on large U.S. companies that pay dividends. So these companies tend to be a bit more stable than some of our high growth companies. Moving up one level, we have the Amana Growth Fund. The Amana Growth Fund started in 1994, so it's over 31 years old, and it focuses on capital appreciation. And so you'll see on the next slide that this is our best performing fund. The Amana Developing World was started in 2009. Our other two mutual funds are domestic equity funds. So we wanted to give our shareholders exposure to the international markets, so to the international companies. So this is why we started Developing World. And so when we look at how those funds has performed, every fund has to have a benchmark, right? So if I'm telling Antonio, oh, I'm going to give you a 10% return, and he's excited about it, but he goes home and he sees a Shazia and she says, oh, I have a 30% return on my funds, then it's going to be like, what happened here? So every fund has to have a benchmark so you know what is the benchmark doing. And so for the income and the growth fund, because they're domestic mutual funds, we benchmark them against the S&P 500, which is the largest 500 companies in the US, index of the largest 500 companies in the US. So, for example, the return, if you invested $10,000 in the Amana Income Fund in 2014, in 2024, it would be worth $27,000. Right? That's a pretty good investment. If you took the same 10,000 and invested in S&P 500 over that time period, it would be worth roughly $35,000, right? So, the income fund was underneath the S&P 500. But if you invested that $10,000 in the amount of growth fund in 2014, in 2024, it would be worth $41,877. So you can see that our growth fund kind of outperformed. And when we look at those figures, the income fund, the average annual return over the last decade was right around 10.8. The benchmark for the S&P 500 was 13.4. And the amount of growth fund, the average annual return over the last decade was 15.7. So that's good. Also here, you can see that our expense ratios for these funds ranges between 1.01% and 0.62. So the expense ratio is how is the company paid for managing the mutual funds. So if you have $1,000 invested in the Amana Growth Fund for a whole year, the expense will be $6.20, right? And because your balances goes up and down every month, that they take that 0.62, they divide it by 365, and they only take out that amount per day. So that's how it works. When we look at our other funds, the Amana Developing World Fund was around 3.5, a little less than a benchmark of 4.02. And the Amana Participation Fund, again, this one is supposed to be conservative. And so the annual average return over the last 5 years was 1.8, and that was slightly under the FTSE's ideal index of 2.5. So this is just my contact information, a kind of QR code that can be used to get my contact information, set up an appointment on my Zoom calendar, so on and so forth.
Hood, for someone to reach out to you to set up a SEP, what's can you walk us through the mechanics a little bit? Is there a minimum? Is there a time frame to get things set up if they were trying to capitalize on this before the tax deadline?
Definitely. And the tax deadline is March.
Yes, and most of the time, if they are an S corp, then their S corporation needs to file by March. But if they're still an LLC, they still should be able to have until April.
Yeah. So the best thing is don't wait to the last minute, because waiting to the last minute, and then people are going to be upset because, hey, I didn't get to file it, and it's like you called on April 14th, right?
Yeah.
Don't wait to the last minute. Make sure that you're kind of looking at this ahead of time, get all your ducks in a row. If you work with a CPA, make sure you understand. So the question for setting up the SEP is not the hard part. The hard part is really having the knowledge of how much money you can contribute for the tax year 2024.
Okay.
So if you're doing it yourself or you're working with an accountant, making sure that you cross all your T's, dotted all your I's on the income that you made in 2024 and the amount that you paid yourself. The setting up the SEP by itself takes, a day. It takes 20 minutes to fill out the paperwork. If you're interested, I'll send you the SEP IRA paperwork and you can fill it out through DocuSign. And then you just need to know how much can you fund it with. Uh, and that's a process that you gotta have to work out with, whoever helps you with your taxes.
Okay. So their tax professional gets with them and says, hey, you can give this, 50,000 to Saturna. They sign up with you, they do it. How do you just take all the 50,000 out, cashier's check? I take it you guys just take a
So
wire transfer or
yeah, so usually what I've seen is that we can do an ACH transfer from your business checking account, right? We can't do it from your personal checking account if it's a business SEP. So, if it's Hood and Antonio Modeling Service, we have to make sure that the bank that we have with HAMS, that bank account, supplies the money for the funding of the SEP IRA.
okay. So there's a question in the chat. Is there any minimum required for the institutional shares for a SEP IRA?
No. And the institutional share classes, so we have two share classes, right? One is the investor shares, one are institutional shares. So for any tax advantage account, that's a regular IRA, Roth IRA, 401k, that you automatically get the institutional shares with us. So the institutional shares usually has a lower expense ratio. If you're in a regular investment account, you have to have over $100,000 to get the institutional share class. So in a regular investment account, if you put in 50,000, you'll still have the investor share class. But the SEP IRA is a tax advantage account, just like a regular IRA, just like a simple IRA, so on and so forth. So you automatically get the institutional share classes.
Okay. All right, good. Thank you. Um, any other questions from our audience? Okay, let me share my remaining slides. Well, while I have you, let me thank you. Hood, let me take this down. Thank you. Well, I want to thank everyone for coming. Oh, can you go over the solo 401k? I didn't understand the calculations. Okay. What would you like for me to go over? Can you be more specific?
So I was a little confused about the SEP IRA is really straightforward because you can simply put in, up to those limits, right? The lesser of
Mhm.
the two limits. But with the solo 401k, there was a slide where you talked about it's related to the employee versus the employer contributions. And I wasn't clear when you did the Acme contribution that was, you said that there
Oh,
was a
So
maximum
Antonio, I think,
23,000.
yeah.
I just
I
didn't
think
understand.
what Antonio was showing that the employee contributions are across plans. So for in the example, if you go back to that slide, Antonio,
yeah, let me pull it up.
you already worked for Acme and had a simple IRA at Acme, and you put in $16,000. So
Yes.
your solo 401k, you only can contribute another $7,000 of employee contributions because employee crosses over from a solo 401k into a simple IRA maybe you have another 401k at another job. All of those together, you can't put in more than $23,000. Is that what
Is that clear? Yeah.
It's not clear to me, and I'm not sure why I'm not capturing this. I get that, but then the next slide talked about, and then you can also do an additional contribution.
This was the
Yeah.
employer contribution, right? So this contribution is coming from your small business. This one, previous slide is coming from you as the employee. So as the employee, if you have your job at Acme, in between your small business, I put in a combination of you from your small business, you're able to put in the 7,000, and then from Acme, you're putting in 16,000. So we clear on that. So that's the 23. Then as the employer contribution from small business, you can put in from your earnings from your LLC. So now your employer, which is Small Biz LLC, is able to put in that amount similar to what you would have invested in your SEP IRA.
Okay, so would then a solo 401k be more advantageous if you've made enough money in your business to supply these funds, to invest these funds from both
Yes, because
sides?
on the next slide, right? So with the SEP, you would probably only be able to put in that 23,000, right? But with the solo 401k, you were able to add in 7,000 from your 401k as an employee that you didn't put into your Acme job. So let's say you didn't have a job. Let's say you didn't have a W-2. Then your employee contribution could be that full 23,000, right? That could be your employee contribution on top of this 23,000. So this is just you as the individual to do it. So yes, the solo 401k, you can add more because it's 7,000 more that you're able to invest in your employee contribution that you weren't able to do under the SEP IRA example.
And the Roth option that's allowed for the 401k, the solo 401k, is there a percentage that can be Roth, or could it be 100% Roth?
So it's only the employee contribution into the solo 401k. So the employee contribution max is 23,000. So that part can be Roth, a Roth contribution.
Okay, thank you.
And I have some slides on that. I hid those because it did get a little bit more, and I can share those in the final cut when I submit the slides to everyone. Okay. Any other questions in the chat? All right. Well, it looks like
I think we had another question. It said, if you contribute to a SEP IRA, can you still do a backdoor Roth?
That I did not look up. I do have some in my notes, but I can't answer it right now. I don't want to attempt to haphazardly answer it. I think you can, but I would prefer to put that in my notes and send that out on the slides, whoever had that question.
I'm with Antonio. I'm sure that you can contribute to a SEP IRA and to an IRA. And so contributing to an IRA, a backdoor Roth is just kind of the way that you contribute to an IRA.
Yeah, because for those who don't know, the backdoor IRA is you contribute to a traditional IRA and then you convert that into a Roth IRA, correct, Hood? And so I think that's what they're speaking of when they're trying to do this backdoor approach. But I have to see if there's some limits, or maybe it may be time gated on when you can do that backdoor based on the contribution.
You can do the backdoor up until April You can make a contribution to, so the backdoor is really a contribution to a traditional IRA, and you can make a contribution to a traditional IRA for 2024 up until April 2025. So you can do the backdoor. So it's a question of, can you just do a SEP and a traditional in the same year? And I believe it's yes, but we can definitely find out if
Yeah, I can definitely find out. Sharina, if you can just take that question down for us, then we can include it in the email that goes out to everyone with the survey. So, are there
So
any?
just to clarify, this is Samini here.
Okay.
So the question is, my understanding as far as whether you can even do a conversion from a traditional to a backdoor Roth, and again, that's for those that they supersede the limit that the earning income limit that doesn't allow you to give a Roth traditionally. They use a backdoor Roth to contribute to
Oh,
an
okay. Yes.
IRA, and then transfer it then to a Roth. But my understanding is that if you have an IRA anywhere else, if you have any money in IRA anywhere else that you, besides a 401k, you cannot do that. So if you could check on that, I think that would be
Yeah.
worthwhile.
Okay. So let me jump in really quick because some of my research and I didn't want to, I knew it would take us over an hour to kind of go through that. But I understand what you're saying now because the research that I did was, so if you have an IRA, an individual retirement account, and then you want to deduct like you want to deduct from your income into your SEP IRA to get you under the limit that you can contribute to your Roth IRA. Am I understanding your question correctly?
My understanding is that in order for you to even do a backdoor Roth where you contribute to a traditional, and then you switch into a Roth, and you do it straight away so that there's no gains incurred, is that you can't have an IRA anywhere else. So I'm not
Okay.
sure about a SEP IRA because that's sort of a business account. If that's separate, I guess that's my question. That you really can't do a
Okay.
backdoor Roth if you have an IRA anywhere else. So I wasn't
Okay.
sure if that apply to SEP IRAs.
Okay. I'll check on that.
that's not, you can do it. That's not exactly how it is. Like, for example, I might have a rollover IRA with a company, and then I can still contribute to a traditional IRA and convert that to a Roth IRA. The challenge is always making sure that you know what money you're converting, when you're converting it, so that with the IRS, you're never like, they're going to say, prove it to me that this money, you never took a tax deduction on it. But we definitely have folks who have a rollover IRA somewhere else, but then they also do a backdoor IRA. But you can contribute to a SEP IRA and to a traditional IRA in the same year, or you can contribute to a SEP IRA and a Roth IRA in the same year.
Yeah, you can. So Smina, I would too. I'll see my research when I'm finished it on the Roth because I did do that calculation, but I thought it would go a little bit over. So give me a chance to prepare some slides on that information for you and go from there. So thank you for the question. We have one more question from Zena. Is there a minimum of how much the small company should make before applying for a SEP worth it? I guess from a money standpoint, Hood, do you have any feedback on that for a small business owner?
It's two questions. How much does that small business make? And how much are you paying yourself from that small business? Right. So a lot of people might not take an additional salary from their small business, and then that's going to kind of, that's not going to allow you to get this kind of particular benefit because you didn't pay yourself. So there's not necessarily a minimum of how much, because there's no cost to set up a SEP. But if your small business makes $20,000, how much of that are you going to actually pay yourself, right? So even if you pay yourself the whole $20,000, then that would just mean that you only could put in $5,000 into the SEP. So, those kind of calculations, and $5,000 to the SEP in terms of, you're taking it off your taxes, you're kind of saving it, so on and so forth, that can still be meaningful. The minimum to open a SEP account is $100, right? So, that's one kind of minimum, but above that, the more that you can, within the rules, take off of your income and kind of put it in long term, is definitely going to kind of work out for you.
Yeah, I definitely think for my small business clients to advise them to set these up a little early on because it's discretionary, right? You can put in when you have it and when you don't. And when you have it, now you're not scrambling. You understand the mechanics, the transfers are set up. And for most small business, it's one less thing to think about if you already have it set up and administered. Like you're not going through this. You do it 1 year and then you're able to go from there and contribute to it, especially when you need it most. It's like a bank. When you need it, they don't give you the money, but when you don't, then it's available, right? So here in this situation, when you need it, it's set up and you have the expertise to do it and move forward with it.
That's a great point, Antonio, because many of our SEP account holders stop contributing money to the SEP IRA because their business grows. So like say they had a one-man shop for 10 years, and then they started adding employees, and then they just stopped contributing to the SEP. SEP is still growing, it's still working for them.
Yeah.
Still growing, but they haven't contributed in 5 or 10 years because their company grew. But if their company shrinks down, they can go back and start contributing to the SEP again. So it's not something where discretionary, was not something where you have to contribute every year. So having one and not using it is better than not having it when you want it. And then, at that point, you can roll your SEP over into a 401k. So you can roll your SEP over into a solo 401k. So you can roll your SEP over into a 401k if you start hiring additional workers as well.
Okay, that's good to know. And I'll add that to my next slides on conversion on that point. Thank you so much. I don't see any other questions at this time. So just an update.
What's the simple IRA? We have time for one more question.
More time for one more. Go ahead. Take it away.
A simple IRA, I'm not sure what it stands for, but it's a, one of the things that's happening across the country is states are mandating that if you have more than 5 employees, you have to have a retirement account, right? And so usually that's something like a 403B, a 401k, but you can also do something what's called a simple IRA. So this is an IRA that you can set up for yourself and for your employees. You have an option of giving a non-elective contribution of 2%, where you just basically give 2% of their salary into their retirement plan, or you can match up to 3%. So you have one of those two options. But it's very kind of easy to set up. The money is 100% automatically vested, but it covers you when the states are mandatoring a retirement plan. And for us at Saturna Capital and Amana Funds, it's a zero cost. So it's an option to have an employee plan with contributions at zero admin costs. And so, as Antonio mentioned earlier, the 401k is administratively kind of burdensome. So a simple IRA is much easier.
Okay, I'm just taking down a few notes for us. Okay, I don't see any other questions in the chat at this time. I want to thank everybody for joining on the call. We will be sending out the recording along with the survey. If you could please complete the survey, it would be super helpful for us. We want to make sure that we're bringing content from AMG or from Hood and other speakers who are knowledgeable and have expertise far beyond what some of us attorneys to come on and give you that guidance and information that you need. So my next call will actually be on February 15th. And those slides information will come out. It'll be with Ryan Foncannon. Ryan is an advanced tax planner, and what he's going to be discussing with me is just advanced tax planning. So if you are a W-2 worker, you know that most of the time you may not have more deductions than the standard deduction, and that causes a lot of tax trouble for W-2 employees. And so Ryan's going to talk a little bit about what we know as leverage charitable deductions, which go on the Schedule A and allow a W-2 person to be able to get maybe 1 to 3 or 1 to 4 leverage charitable deductions on their dollars to help them save on taxes. And this
whoa.
So
Antonio,
please tune in.
I need that information.
Tune in. So tune in next month, February 15th at 11 a.m. Thank you, Camille. Yeah, so see, it's a great deduction, right? Camille knows about it. I think she knows Ryan as well. And so if you have others that you want to invite in to the call who definitely, for these W-2 scenarios right before tax time, maybe leverage charitable deduction is something that they can benefit from and go from there. So Sharina and I will get out the recordings to you once we edit it and get it up on YouTube. So you will get the recording and you get the survey, and I'll work on the other slides and information that the participant asked for. Samina on the backdoor Roth and get that. I'm gonna try to include that in my note out to you all. So the recording may come out a little delayed so I can get that information in the post, but please fill out the survey. Thank you so much for spending some time with me on this Saturday. And I look forward to seeing you all on February 15th.
Yeah, I'll be there.
Yeah, you'll be there. Thank you. I look forward to having you. Thank you all so much, and have a good weekend.